message. Somebody saying sharing screen. All right. So yes. So when you see this, you will see that where it opens, it often close at that same position. And this particular type of a candle is called a doji candle. And there are also two different type of doji candle. One that will be like this, very like this. You see something like this, and you also see something like this, right? Oh my God. I don't know who is zooming this. Please, Simon, don't zoom. All right. So again, where it opened at, it closed at the same position, but it does have a slim lower shadow and it does have a high small shadow. So every candle has a high and every candle has a low. Doesn't matter how small it is. But now you call this one, it's still a doji, but this one is a gravestone doji, and this one is a dragonfly doji. But they are all neutral. When you see any of these candles, they represent that there's a cool off period of consolidation, or the market is just indecisive. The market is waiting for a change. Maybe the people are resting, or people are not interested at that point. They are waiting for the market to make a decision. So most of the time you will find this in a period of consolidation. And again, unlike this one that have a normal body, normal low, normal high, and a body, this one close the same at the same place where it opened at. And again, to be honest with you guys, there are a lot of candles, there are a ton of candles, and we'll head to the chart soon, and I'll show you guys where you can represent, where you can find this, and how you can use them in your advantage. There are a lot of candlestick patterns, but as beginners, once you know what a green candle is and what it means and how it's formed and where to use it and how healthy it is, and I'll tell you guys a different, maybe not on writing like this, because this all this rough writing here is a little bit bad. We'll show you guys a real candle, and we'll show you a healthy candle and less healthy candle, or maybe a fake out candle. But maybe take some note again, like I told you guys, the formation of a new candle likely depends on how the previous one was. This is not a statement that you'll find somewhere. This is not a statement that is written somewhere, but what I'm trying to tell you is the probability that the next candle forming will be like the previous candle is higher than the probability that the next candle forming will be different color. It depends the situation. It depends where you are in the market. It depends what time you are using and when you are using it. But there's high probability that the next candle forming will be like a previous one. So when you know that, you can always read the candles and know how to use it in your advantage. Somebody, how did you put this green box here? Look like a green candle. Who put that? I couldn't find a name that put this. Okay. Right. Okay. So again, like I said, the probability of a new candle forming likely depends on the previous one, but this is not in all cases. Let's head to a chart and show you guys and continue this note there. But this was just some small basic stuff that you should know. And I mean more. Okay, let's actually do some a little bit more and show you some more single candlestick patterns. let's show you guys a hammer. And let's draw some more. A hanging man. Okay. Inverted hammer. And a shooting star. All right. So yes, guys, assuming that this is your high, this is a normal candle, like we told you guys, every candle has a high, a lower body, the low, a body, and a open and a close, right? And when you go more detail into it, still as beginners, you should know this because these ones too are very important, especially when you're taking trades, and they get confusing sometimes. Let's just differentiate it a little bit before we go to the chart. This is a hammer. A hammer often hammers are often found at the bottom of a downtrend. So you will often see a hammer at the bottom of a downtrend. It has a very small upper, but it has a very small high or top, little or small top, and it has a body that is smaller uh, uh, towards the top. So the body of the hammer is smaller and is towards the top, and the tail or the lower part of the hammer is as at least twice the size of the body. So the lower part of the hammer is at least twice the size of its body, and the body is usually found near the high, and most of the time it doesn't have it's very small high or just a small high. And here is your hanging man, just like a hammer, but usually this is found mostly towards the top
Matalo dry no.
of an uptrend.
Lunge afunu.
Mostly you will see a hanging man towards the top of an uptrend. Please, if somebody can take the names, if you see somebody that is talking and you can put their names down so that next time we'll give them warning before letting them into the meeting, just jot them down somewhere, please. And again, we say every candlestick has a low, high, and a body. And a hanging man as well, just like a hammer, has a smaller body that at least the tail is twice the size of the body at least. And the body is usually found near the high. And you will find a hanging man towards the top of an uptrend. You'll find a hanging man towards the top of an uptrend. Unlike a hammer, Unlike a hammer that you find a hammer in a downtrend at the bottom of a trend, signaling that maybe there's a trend reversal, you will find a hanging man towards the top of a trend, signaling that there's a potential reversal in a trend. And we have a shooting star. A shooting star, just like an inverted hammer, also is a candlestick that has a high that is as twice as the body. So a shooting star has a high that is as twice as the body, and it has a smaller body that is found closer to the low. That's a hanging man. So just like any of these candles, they have little or no, just like inverted hammer, it has a little or no low. And meaning that this candle usually happen because buyers try to push price to the upside, but they were exhausted at the end of the day. So sellers came in and pushed the price, having it close towards the low. So you mostly find a shooting star at the top of a trend, signaling that there's a potential change in a trend. You mostly find this at the top of a trend. Unlike a hammer that you find at the bottom of a trend, you will find a shooting star at the top of a trend, signaling that there's a potential reversal in a trend. Okay, just like a shooting star, you have your inverted hammer. Remember, I would say a hammer is found at the bottom of a trend, of a downtrend. It's found at the bottom of a downtrend, signaling there's a potential reversal of a trend. And all of this candle, doesn't matter the color that it is, so long as you find them at their positions, so long as you find them at where they are supposed to be, they can represent this same type of candle. And mostly these candles, these four type of candles, their body, their longer part is always at least twice the size of the body. And again, as we were saying about the inverted hammer, the size of the body, the size of the high is at least 2 times the size of the body. And you will find an inverted hammer in a downtrend, towards the end of a downtrend. You find an inverted hammer towards the end of a downtrend, signaling that there's a potential shift in market structure, signaling a potential reversal. So, like I said, you'll find a hammer towards the end of a downtrend buyers hoping that there's a reversal in the price, there will be a reversal in the trend. And you also find a inverted hammer towards an end of a downtrend. This is when buyers are hoping that there will be a reversal in price, right? So this and this, you find them towards the bottom of a downtrend. This one and this one, you find them towards the top of an uptrend. Again, like I said, the color doesn't really matter, but most of the time when this one is red, it's often important. When the body of the shooting star is red, it's often important because it's indicating that there's exhaustion in an uptrend. It's indicating that there is high bearishness in the market, that sellers are more than buyers. And with other stuff and volume, you'll be able to take some good action. And when a hammer is green, when the body is green, it also indicates that there is a higher probability that the trend is going to reverse. But again, like I said, you cannot really use just this single stuff to determine whether you're taking a trade or not. With a lot of stuff combined together, you'll be able to take a good trade. But again, like I always say, there is nothing like a high probability trade. All that matters is what you're using to trade, your position sizing, your risk and reward ratio, and all that stuff. So all this wouldn't even matter if you cannot manage yourself. So at the end of the day, it's important, but given other factors put in place will make you have a healthy trading strategy. Okay, let's try to head to the chart and try to identify some of these. Let's try to head to the chart and try to identify some of these candlesticks. Make sure nobody's in the waiting room. All right. There you go. Share your screen. Boom. Okay. Well. Oh. Okay. What just happened? Sorry. All right, guys. Let's get a chart right here. All right. So let's try to identify some of these. Let's try to identify some of these candlesticks on a real chart, right? Remember, we said a hanging man. Say this was an uptrend. For instance, let me remove all of this. Uh, Let me remove some of these. Okay, say just assume that this was an uptrend, right? So it started right here. Maybe if you use 1 minute, you'll see more trend. Say it started right there, and that was your hanging man signaling towards the top of a trend. And you likely see that it's trying to push the price to the downside. It's trying to push the price to the downside. But again, like I said, one of these stuff wouldn't potentially mean that there is going to be a change in market structure. Just one of these stuff wouldn't definitely show you that there is going to be a change in market structure. But you will see them a lot. You will see them a lot. It just depends where you're seeing them. Sometimes they're just somewhere to distract you, but make sure that you always use them in your advantage. And bear with me that you can argue that this was a hammer right here, right? At the bottom of the trend. This was your hammer right here. This was another one. Remember, I told you guys the body, the tail of an hammer, the tail of a hammer is at least twice the size of the body. So say that this was your hammer, it signaled that, okay, there is a potential trend reversal, there's a potential shift, but that doesn't mean that there's going to be that trend shift, but there's potential that this trend reverse. And this was what? An inverted hammer right around it. An inverted hammer, like we say, whenever you see it, the body, the high is at least twice the size of the body. So that was your inverted hammer found at the bottom of this downtrend. Do you guys see all this price action, this price movement that came from this top to this bottom? So all this happening towards the bottom, indicating that, okay, there will be that maybe there is some sort of price reversal. But what will cause that price reversal? I don't know. You have to take so many stuff into consideration. Say, like I said, like I put all this in the morning. I think if price get above here, this is looking bullish at least to up here. But until that happened, this didn't work. So it's not going to work all the time. It's not going to work all the time. Again, let me interrupt you guys for a little bit. If this works, there is something that are called three drives, where you say this is your one, another one, and there, I don't know if that is the trigger or something, or this was it, and that's your third drive. So if this end up working, this is another strategy I use in trading, three drives, where you see a low and that low get taken, and then once that low is being reclaimed, when I mean the price traded back where the low was, where the low formed, and came back and retested a zone without deviating this area, you call that three drives. Anyways, when we get there, you guys will understand. So if price managed to get up here, okay, as for me, I would say it was because of this three drive combining with this hammer and the inverted hammer sitting right at the bottom. But that's not just all, because there was also something else that I was looking on this chart, which is in the bigger picture. Anyways, let's not interrupt this for now, and I will show you guys that soon. All right, so we've identified a hammer, we've identified an inverted hammer, we've identified a hanging man. Again, like I said, doesn't mean that it's going to happen. Maybe price end up taking all these lows, right? And then you'll see that, okay, this was a little bit of an uptrend right there. You can argue that if you put 1 minute, you will see that that trend was actually long. If you put 1 minute, yes, look at that. If you put 1 minute, you will see that this trend has actually been long. Look from down there. So depend the time frame that you're using it at, and you also identify a lot of stuff there. Okay, let's see if we can identify something here with the 1 minute. That was your doji. We talk about a doji, means that price is neutral, and you can clearly tell that price was neutral up there before getting broken on the 1 minute. Where was your low? That was your low, and that was your high. So you see that during all this period, this doji form, and what did it tell you? It told